When you're ready.
Yep. So good afternoon, everyone. My name is Alan Morgan, and today I will be proposing to buy SodaStream and sell Colgate. Now, SodaStream is the leading manufacturer and distributor of home beverage carbonation systems. They're currently present in 45 countries. They have 22 manufacturing plants and about 7 million users to their product. They're broken out really into two pillars. The first is the environmental friendly side. About 50 billion of these bottles are consumed every single year. 23 of those are actually recycled. The remainder of them end up in landfills, which pollute our soil and make us sick. The other pillar is the health and wellness side. SodaStream uses 2/3 of the carbs, calories, sugars found in our regular soda, and no high fructose corn syrup. They've adopted a razor and blades model, which keeps buyers coming back and generating sales of higher margin syrup and carbonators, and we'll get into that in a little bit. But one of the main initiatives the company has is they must succeed in the United States, which is the largest market for carbonated soft drinks, to be successful in the long run. So I understand not everybody might be familiar with SodaStream, so I just want to give you guys a brief overview of all the components of the product. It starts with the soda maker. They range in about $80 to $180 depending on the device's functionalities. Then you have the carbonating bottles. They are reusable. They come in either plastic or glass. The plastic is BPA free, but both of them are dishwasher friendly. Next you have the carbon dioxide cylinders. Those come in two sizes, 60 liters and 130 liters, and they can be either refilled at a local store or exchanged and delivered or ordered via phone or internet. And lastly, of course, you have the flavors. They come in bottles or capsules, and currently they have an assortment of about 100 flavors. Now, I know that a lot of you might be wondering, well, is this investment really cost efficient? And so I did a quick sort of analysis. And basically what I came up with is that you would have to drink approximately 267 liters of soda in order to make up your initial investment. Now, you all must be thinking, well, that's a lot of soda. Maybe I drink one a week or one every 2 days. It just doesn't seem right for me. And you have to think about, what about an average household? Let's say they're a family of 4, a family of 5. Well, in that case, they're gonna amortize their investment much quicker. The other obviously point is, if you're somebody who's environmentally friendly, you want to help the environment, stop wasting plastic bottles, that's something that might interest you. The health side of it, reducing the carbs and the calories. And then lastly, obviously, the convenience factor as well, not having to bring home or carry home bottles of whether it's sparkling water or soda every single time. Now, the company has managed to form some strategic partnerships and synergies. Their product is currently being sold at some of the largest retailers in the world, so clearly they have absolutely no problem gaining access to shelf space. Now, I mentioned the importance of succeeding in the U.S. I went back and I just wanted to break out sort of the revenues by region. As you see and what we would expect to see, they are working towards that initiative, and they are absolutely starting to gain a lot of their revenues from the Americas region, which obviously the U.S. is the largest component of that. Regarding their model, so let's take the U.S. Currently, about 50% of soda makers, of the revenues are coming from soda makers. The other half coming from their high margin consumables. As the market begins to saturate and becomes more developed, you're going to start seeing that the consumables, which is what you want, is going to be making up most of the revenues, and then the soda makers are only going to be a small piece. Moving on to management. So they have a very talented, innovative, and creative team. They're young. All of them have experience with some of the largest consumer conglomerates in the world. They are committed to returning shareholder value. I think the numbers here speak for themselves. And the balance sheet is clean, no debt. So no debt, growing cash position. Revenues have been growing at a 47% compounded annual rate since 2009. Net income, 71%. One point you might notice is the free cash flows are negative. We would expect that for a relatively young firm like SodaStream. They are investing into the business, but we also do expect those cash flows to become less negative or positive as the company grows going forward. I'm not going to spend a lot of time on the slide, but basically I just want to give everyone a feel or a flavor for basically what kind of growth the company is currently experiencing, and again, I do expect that going forward. Regarding pricing, they're currently trading about a 25 multiple, a forward of 17.4. Price to book is below the industry average. The stock price is about at a 40% below the 52-week high, making it an optimal time to buy. A lot of you might be wondering sort of what this drop was, and I'm happy to get into that in the Q&A session. As far as my DCF model goes, and again, we can talk about the assumptions at the end, but I'm valuing the company at about $78. The PE is valuing it at about 77, which comes out to 40% upside. There are obviously some risks with any type of product like SodaStream. First and foremost, the consumers can be perceived as a gadget that is a fad and runs out of the trend sort of cools down. Obviously, failing to successfully penetrate the U.S. market would be a big problem, but again, as I showed before, I don't think that's necessarily the case. And then obviously there is a risk of being acquired. If they were to be acquired, I would expect them to sell at a premium. Regarding the margin of safety, I believe they have created a moat for themselves. They have the first mover advantage in their favor. They have the patents in place, and the innovation is tremendous. They have actually signed an agreement with Samsung and Whirlpool, which will essentially implement their product directly into refrigerators that are being sold. So essentially SodaStream ready refrigerators. They also are moving into the alcoholic beverage market, and they signed a preliminary agreement with Campari on that. So these are the grades I give each of the criteria, and I give it an overall A-. Moving on to myself, Colgate. I'm not going to spend a lot of time on the business because I think that you all are very familiar with it. It is a tremendous company. It's very large. It's got strong brand recognition and loyalty. One thing I would point out is their ROE is almost 104%, which is tremendous. I question whether that is sustainable necessarily in the long run, but again, that's certainly a very, very strong. Where my concerns really start is with the balance sheet. They've accumulated a lot of debt over the past few years. Their book value is actually, if you take out the goodwill and you take out the intangible assets, the book value per share actually turns negative. But again, for a company like Colgate, I certainly understand that there's some goodwill in there. But really, again, if we look at the charts, we see debt in the blue has been accumulating very, very quickly over the past few years, and the cash flows, which you see in red on the bottom, haven't really kept pace with that debt increase. The other part I want to point out is obviously that since a lot of their growth is being funded by debt, we are currently in a very low interest rate environment. Should those interest rates increase, that could also prove as a problem for Colgate going forward. The other issue that I have with the company is that they seem to reach the point where they're sort of stagnating. They are, I really question how much more innovation the company can have. I know that they've done very well in the past, there's no question about that, but I don't think that's necessarily an indication of how they're going to do going forward. I sort of question how many different ways can you sell a toothbrush, how many different ways can you sell toothpaste. Obviously marketing plays a big factor in that, and advertising, certainly get that. But I think the numbers sort of speak for itself. It's sort of plateaued lately. They're only looking about at a 7% growth rate going forward. So based on that, last thing I want to touch on price. They have underperformed the S&P 500 over the 4 of the past 5 years, which is also something that sort of caught my eye. And lastly, they are currently trading near the 52-week high, which might make it a great time to sell. So I give Colgate a B overall. So looking at them side by side, obviously SodaStream would be my strong buy. And with that, I'm going to open it up to any questions you may have. I'm sure there are a lot of them. Thank you. Yes.
So if you look at their business model, they've got negative free cash flow, that's fine. But the way to turn that around is going to be those add-on sales. I wonder if you see any sort of evidence that customers buying the initial product and then maybe 2-3 years down the road still buying it. So has there been any of that evidence?
I mean, it's young, right? It only IPO'd in 2010, so I don't have that much data to really go back on. But what we have seen is that if you look at markets like Switzerland, where they're doing very well, Sweden, where they're doing very well. Again, these are countries that are very environmentally friendly. They that's big for them. They're willing to make that initial investment. What we've seen is that the consumables, I don't know whether they're coming back to buy another device or whether, families are recommending for somebody else to buy a device or whatever it may be. But, you know, the consumables is really the main part of where they're making their money. It's that high margin on those recurring costs, which are the flavors and the carbonators. And sort of I think that's what they're looking to continue to push going forward, and that's what they're looking to make up, how they're going to make up the cash flow.
So what do you think if, say, you know, a buyer came in, Coke or something on the line, what do you think they would take from that?
So Coke has about, I think I looked around $8 billion in cash right now, so buying them would not be an issue. I think that they would probably buy them at around $3 billion, $4 billion, something like that. That's sort of the number that I would
What's that
buy.
per share?
That's pretty cool. Let's see, actually. So looking at, so I value them at around 2.1 billion right now. That's 78 per share. So bringing it up, if we bring it up to 3 billion, I don't know, it's going to be probably like something like $90, $100 per share. Yep.
So other than that, these have dropped. The share plummeted in 2011. What was that about?
I can't speak for the 2011. I'll speak for the one that the recent one. The recent one was due. So it was interesting. Their third quarter, they actually beat third quarter EPS estimates. Where the real concern was that there was a slowing down in the flavor sales, which are obviously that high margin recurring sales. They only rose 7%, which were below the estimates. The truth of the matter is, though, when you look at the real reason to that was not necessarily a problem with growth or that number was low. Inventory from some of the big retailers, they overbought some of they couldn't get rid of as much as they bought from SodaStream. So I think actually if you look at the sell out, I think from a consumer standpoint, it actually was 53%, which is still, they're buying flavors at a high rate. So if the rate hadn't slowed down, what happened is there was some poor inventory management on the retail side, which was, you know, Walmart or whatever it may be, and they overbought and couldn't get rid of it all. And that's what sort of screwed that number, and that's what caused the plummet. Yeah.
In terms of SodaStream, we can say that a company like Kraft or Coke or something can make basically just pushes CO2 to
So the companies, the companies that currently have shown an interest in this area have been Starbucks and Green Mountain Coffee. As far as Starbucks goes, basically, first of all, they have the patents, right? So they have the patents, so that's one thing that SodaStream has. But Starbucks looks like what they're trying to do is to have these type of machines only in Starbucks, only in their stores. They're not going to sell them for people to take them home with them. So that's one thing. That's how they differentiate each other.
So the SodaStream patent, basically every time you make soda, you do SodaStream.
On the particular, the caps, whatever, right, it's all the particular parts of the device there.
Their market share in like those
Yeah, it's very low. So they're carbonated beverages worldwide is about a $250 billion business.
that includes pre-made.
Yes, that's right. And that also includes stuff like sparkling water. If we break that down, just sodas, there's 220 billion, and SodaStream has about a 0.2% share. So there's a lot of work to go there. Yeah.
Are they selling these devices at cost or at a loss or anything? Or, I mean,
They're
do you know what the
selling.
margins on those are?
I don't know what the margins. I don't have a number for the margins, but they're definitely not selling at a loss. I'll say that. Yeah. Yeah, it's a good question. The do-it-yourself market has become very hot lately. A lot of people like that. A lot of people also like to know sort of what's going in my food or what's going in my beverage, and I think that this gives them a little bit of a better sense of that. But again, I think that, whether people are going to be willing to do it or not, I don't know. It seems that is the case. I know that, for example, my grandparents had one of these machines, and they used it, and they loved it, and they had no problems with it, and they're old, right? So, yeah.
Have you thought about buying?
I have. I actually will not buy one for myself. I plan on buying it for my parents because they drink a lot of seltzer. But I'm not a big soda drinker, but I think it would be a good investment. Yeah.
What is the for that device?
5 years. Yeah.
Flavors include something like Coke, Pepsi, and
Yep. But everything. So basically, the other thing, actually going back to you, not only they include Coca-Cola,
Brand and stuff.
Yep. They include that, and then you can also make your own. So you can mix, let's say, a vanilla with strawberry or whatever, cherry or whatever. So you can make your own, whatever kind of customize your own flavor that you want.
So you get a small bottle of concentrated Mountain Dew and you mix it with this, or?
You get a small bottle of their syrup, which is they've partnered with Ocean Stream and also with Kraft, which makes Kool-Aid and things like and those types of things.